Hey everybody. Morning. Happy Friday. You got today. We got Monday, Tuesday, Wednesday. 4 trading days left in 2025. So let's do a poll. And here you go. You're gonna have trading profit for 2025 or profit loss or trading loss for 2025. Let's see what you think. and so, thanks for coming, everybody. Thanks for being here. I couldn't do this show without you. And for those of you that have been coming to the Market Masters show with Jack and I, for years I've had this picture of a book. I didn't even know it actually existed. I thought it was kind of a joke. But Santa thought it was funny enough to bring it to me. And it's a common trading kind of funny thing that what you spend your money on as a trader, especially if you're a big city trader. And so I've got this book now, and it'll be funny when Jack and I have resume our show on Monday. So I actually have a real copy of the book now. Santa brought it to me. Kimberly's like, I don't know, but it was pretty funny. And so anyway, it's about a tow truck, hookers, and a snow blower blow, and how they save Christmas. Anyway, I after I went home on Wednesday, I was like sweating and all this, like, oddly it was like 70 degrees here on Wednesday. Still supposed to be like 70 today. Not usually that warm here on Christmas, but it was yesterday. Or it was yesterday. We were in the 70s. And when I went home on Wednesday, I was sweating and had a fever. So I spent the whole evening laying on the couch, and then yesterday woke up, didn't have a fever, but then started having a small fever, and so I have not felt super awesome for a couple days. Still a little gruff here in the voice, so bear with me. I'll do the best I can. Seems that I'm having a little allergic reaction to something. Probably have a sinus infection because my face hurts like crazy, but yeah, that's the way it goes. Hey everybody, morning. Welcome back to the show where we drink and have questionable life choices for breakfast here. The Blue Monster today, and we try to make sense of the markets, even more caffeinated, less caffeinated. There's no decliners on the list today. That's the craziest thing. I've never encountered that. I go pull pre-market gainers and decliners right before I start the show. My script wouldn't even run because there were no decliners. I was like, that's so weird. So before we jump into that, though, let's talk about Nvidia. And that stock has basically become the entire personality of at least 3 people that you might know. The undisputed king of the AI boom. Well, last Friday, just as everybody was packing up for the weekend, King Jensen and his court at Nvidia decided to do a little holiday shopping. Instead of buying a new yacht or anything like that, they dumped $20 billion in cash on a little AI chip startup named Groq. Groq. And it's not Groq like XAI. This is Groq. Now, Nvidia, in its infinite wisdom and with a straight face, is calling this a non-exclusive license agreement, which is corporate equivalent of saying we're just friends after you've already moved in and started using the toothbrush. They didn't buy the company. You see, they just licensed the entirety of all its technology, hired its entire executive team, and took the keys to the castle. It's another bold strategy out there, Cotton. See how it plays out for them in this case, especially with the antitrust regulators. But this isn't just a story about a big number and a big purchase. This is a story about fear. This is a story about a king who realizes the castle maybe not built on the most solid ground. And that $20 billion, that was the sound of the largest, most expensive panic button in history being slammed. Now, to understand the whole story here, yeah, we have two acts in this AI play that we're all living through. Act one, training. That's where Nvidia became the king. Think of training an AI model like building a giant complex factory. It's incredibly expensive, takes a ton of energy, requires very specific powerful tools, Nvidia GPUs. You know, Nvidia's graphic chips, they were the perfect tool for training models. They're like a super advanced Swiss Army knife, versatile, powerful, and able to be configured for anything, pretty much. These massive AI factories build out like GPT-4, GPT-5, 5.1, 5.2. The world needs the factories. Nvidia sold the best tools and the stock went to the moon. Simple. King Jensen wore the crown. But now we're entering into Act 2. Act 2 is called inference. If training and building the factory, if training is building the factory, inference is running the factory 24/7 to actually produce things that people want from the factory. Every time you ask ChatGPT or another LLM, large language model, a question, every time Midjourney generates an image, every time Nano Banana generates an image, you get it, right? Anytime you ask an AI for something, that's inference. Now, the dirty little secret that nobody was talking about till recently, inference is where the real money is spent. It's not a one-time cost of building the factory. It's an endless, soul-crushing, electricity-guzzling cost of running it forever. How bad is it? Well, OpenAI spent maybe $150 million to train up ChatGPT 4. Their bill to run that model after they trained it, $2.3 billion in electricity. And that's 15 times more than it cost to build the model in the first place. And this is where Nvidia's Achilles heel is. Their Swiss Army knife of GPUs, well, they're just too darn expensive and too power hungry to actually run the factory. Now, while King Nvidia was busy counting its training money, because they're the king of those training GPUs, the quiet giant out there, Google, was building a different kind of tool. Not a Swiss Army knife, but a scalpel, a very purpose-built, hyper-efficient weapon called the Tensor Processing Unit, or TPU. It can do all the fancy things of a GPU. It can't really do, well, it can't do all the fancy things of a GPU, but it does do one thing very, very, very insanely efficiently well. That's inference. It's faster, it's cheaper, uses less power, up to 60% less power. Don't believe me, ask Midjourney. They switched from Nvidia's GPUs to Google's TPUs and slashed their inference costs by 65%. And when your customers are actively fleeing to your competitor to save billions of dollars, you don't have a business, you have a problem. Which brings us back to this $20 billion purchase last Friday, if you call it a purchase. Nvidia saw the writing on the wall. Google stock has been on a tear, up 70% this year, precisely because the market is waking up to the inference story. So what does Nvidia do? They can't just build their own TPU overnight. The secret sauce is too complex. So they did the next best thing. They found a guy who invented the secret sauce, the man who helped Google start the entire TPU project, Jonathan Ross. And it just so happens that he left Google a few years ago to start his own company, Groq, different Groq than XAI, to build an even better version of this scalpel, even better processing unit for these inference models, or for the model inference. Nvidia didn't just buy a company for $20 billion. They bought the brain of the entire competitor's chief architect. They looked at the guy winning the race, and instead of trying to run faster, they went ahead and bought his legs, right? The venture capitalists who funded Groq, they have a very, very merry Christmas at $20 billion, having tripled their money in just 3 months. Think about that. So what's the opportunity for us? You know, these us market monsters out there. The beautiful part is the story no longer just buy Nvidia. The game is changing. First, most obvious, Google is now officially terrifying Nvidia as a real competitor and contender in the AI chip space. They're no longer just a search engine with a hobby. They're a hardware powerhouse, and the market is just starting to price this all in. But let's think bigger about this. This is an arms race, and in an arms race like this, you don't just bet on the soldiers. You invest in the people selling the bullets, maybe the shovels, maybe the tank producers. The entire semiconductor food chain is a gold mine right now. So who's making the inputs for Google's TPUs? Well, Broadcom, AVGO, Alpha Victor, Golf, Oscar. They're a key supplier, and their stock has been reflecting that cozy relationship with Google. And who's the other guy, gal, trying to get in on all this action? Well, none other than AMD, Alpha Mike Delta. They've been talking a big game and taking steps to build their own inference chips. They produce a lot of I've said this for a long time, is that when you look at Nvidia, they build the models, but when you look at practical applications and the actual chips that are out there running these models in real world stuff, AMD tends to work the deals. AMD chips are in a lot of the gaming consoles, a lot of there's even Ryzen chips in Teslas. So they're the scrappy underdog, and if they can capture even a small slice of this massive market, the upside potentially huge. But let's go one level deeper. Who builds all these chips for everybody? TSMC. Their ticker, TSM. Tango, Sierra, Mike. The Taiwan-based foundry, whether it's Nvidia, Google, AMD, they don't care. They pretty much all go to TSMC to get their designs made into actual chips. They're the landlord of the entire industry. And who makes the machines that TSMC uses? One single Dutch company. Maybe you've heard of them, maybe you haven't. ASML, Alpha, Sierra, Mike, Lima. They have a complete monopoly on the extreme ultraviolet lithography machines that are required to make the most advanced chips. They're not just selling the shovels, they sell the only shovel on the planet right now. But China is coming for this. There's rumblings that China hired some ASML engineers and are working on a secret project. Look, the AI boom, it's not over yet. It's just entering a second, probably much larger phase. Nvidia's $20 billion panic purchase kind of proves that there's going to be some jockeying around. The throne is no longer, everybody comes for the king, so the throne's not necessarily secure in this Game of Thrones. The real sustainable money over the next decade might not be made on the king, but on an ecosystem that's now scrambling to power this revolution. So if you're heavy into Nvidia, be careful out there. They're getting a little uneasy, I guess you might say. We'll see what happens. So that's all I have for the monologue. Let's look at what's moving, try to figure out some stuff to actually try to make some money today. What do you say? What do you say? Click, click, click. Move this over. And in the poll, looks like we had 63 people vote. Yeah, 75% profitable, 25% in a loss. Be careful out there. You got 4 days left, and we'll be on to 2026. So what's your plan to fix 2026? Right there. And if you don't have a plan yet, you need to get a plan going. Figure out how you're going to how you, not really fix it, but like, what are you going to do to change to be profitable in 2026? What are you going to do? And if it's trade more or trade less or trade, all trading involves a substantial risk of loss, and past performance is not necessarily indicative of future results. This presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries. If you desire personal financial advice, there's people you can hire and consult for that. I'm just a guy here on YouTube, got a bag of unicorn dust, sprinkling on the market. I don't have a crystal ball. I'm not right all the time. I try to be, but I get lucky often enough, but sometimes I just get it wrong. So here we are on the 26th, full regular trading day today, full regular trading day Monday, full regular trading day Tuesday, full regular trading day Wednesday. That's the 4 days we have left in the market. 1, 2, 3, 4. The first is closed, just like Christmas was yesterday, full close of the market. Then Friday is the first day to trade in 2026. I'm taking the day off on Thursday, just like I did yesterday. I'll be back at it, though, on Friday, right here. Make sure you're subscribed. Welcome, everybody. So, how do we make money today? What's moving? So, today, half the world is still shut down for the Christmas holiday. Not a lot. Don't expect a lot today, really. And then next week will be interesting. You got to get your tax harvesting done basically by like the 29th so that you can have settled funds going into the year. Check with your broker. That's Tasty Trade sent out a notice. Basically, you had to get all your things done here so they can settle here so you can have it, on the record for the new year. And then don't forget, if you're in a taxable account, if you sell it, you got to wait more than 30 days to buy it back. Otherwise, you can get caught in that wash sale crap. If you're not familiar in a wash sale, Google it. If you buy back a substantially, what do they call it? Substantially similar asset. So if you sell 100 shares of Nvidia and you buy it back next week thinking that you can, be in the new year and wipe the loss or gain clean, you could get involved in on a wash sale, especially if you buy it back cheaper, and where the loss is disallowed, and it gets really complicated, especially if you split years. They, in the infinite wisdom of IRS, they figured out people were doing this, where you'd sell right before the end of the year and buy it back the next week, and so they give you like a 30-day period where you have to be out of it to not count as a wash sale. And just Google that. Beware. You're trying to do that in a taxable account. So here we are. S&P closed at the highest level ever right there on Friday. So we're set to touch 69.80. Right there. That's about 40 points higher than where we are right now, where we opened. See if that can actually happen. The futures are into a danger zone. Now, as I was warning last week, the Santa rally typically ends like today. And then we get a pullback into the new year. So be careful. Like, Santa rally doesn't mean the rally continues into the new year. Typically, we get this little pullback right here. Pull this over. The last couple of days of the year, typically we get a little pullback. So we may peak out today and start this pullback. Now, like, well, how does that usually play into? This is seasonality for like the last 20 years. January usually starts out kind of choppy too. So not exactly the most stellar kind of wrap here. Now, does it have to happen? No. We could go higher right into the end of the year. No big deal. But historically, 20-year history, each of these blocks is 2%. As you can see right here yeah, it's actually 16, 14 and 16. So pulling back a little bit, that's like up to 1% right there. About half of the block. Somewhere between 0.5 and 1%. We can see a pullback right there. So be careful is, permacautious. That's the name of the game here. Now, NASDAQ here is not breaking out higher. That's still a downtrend. Still a downtrend in the NASDAQ. So S&P has this potential to go on up. Tag that level. You may be like, well, what about the S&P seasonality? Well, we could pull that. We pull that up. Check it out. Let me find it really quickly. Give me just a moment. Jump into the right place. Find the chart. Pinned in the messages. See, that's VIX seasonality, NASDAQ, oil. Where, oh, where? There it is. Let's make this bigger. Pull it over. So S&P usually kind of parks. We get a run and park, but we start out little pop and a dip into the new year right there. So be careful. So we could carry the S&P 500 higher while NASDAQ does not necessarily do that. So if you're heavy into big tech, be careful. This is a pattern for selling off. Just look at the seasonality of the whole situation. Now look at the smaller time frame here. We're coming up into we might be able to tag 7,000 on the futures right there. But we've been pretty far away from this 30-minute roadmap line right there. That would be the first line of support on the futures. Why look at the futures? Because, well, you notice there's no swings in here. Just gap up, gap up, gap up, gap up, gap up, gap up. So the futures provide more clarity on how that price action happened, because they trade 23 hours a day, 6 days a week. Whereas S&P, when we closed on Wednesday, we haven't moved again till today. There was no extra time, no extra price action. So NQ also providing a little bit of uncertainty here. Now, NQ is making, we don't have this big downtrend on here. We're actually pushing higher. This one could come up to 25,977 right in here before we meet a resistance. Now it could come on up to 26,100. Slightly different prices than the NASDAQ cash index. Why look at the futures over the cash index? Because same reasons for ES over the cash index. And NQ. Oh, type 1-1. There we go. So look at this right here. The difference between the two prices. We're roughly 180 points difference between the NASDAQ futures and the NASDAQ index. The NASDAQ futures being about 180 points more than the index. So when you look at these prices here, and I talk about these upside targets being 25,977, 26,101, minus 180 points, that would be the top out on the cash index. So 26,101 minus 180, 25,980. Look back over here. Yeah, so it'd be a little bit higher than this move, but not higher than here. Still be a lower high. So we may be able to push this right up in here, 25,980, and then stall out. Just be careful. It's kind of like trying to read the tea leaves on the futures and the cash index. Russell starting out with the potential to roll down here. I'll be careful. Unclear price action. Oil came up, tested that downtrend of highs and turned down just as I thought we might. Expect this to go lower low, probably down into low 50s. Probably not going to do it before the new year. Probably going to be sometime in January, maybe February. And this has been a downward grind for a while. For a long while. Number of years. So we're closer to the bottom than we are the top, but nothing's concluded so far. This could still chop around in here for another 6 months. I don't know. Eventually, we're going to make that move down in that low 50s, wrap this up, and probably pop out of here. Gold. Gunning for that next fib line. 4,600. Silver making a big move too because China banned the export of silver. If this catches up to gold, we have the potential to be all the way up here like 300. A crazy move. Still crazy. If you're going to play this, be careful playing SLV. There is 300 times more paper silver issued than there are physical ounces of silver in the COMEX vaults. SLV could go into liquidation. So Sprott funds, if you wanted to play this PSLV, that would be a better way. Sprott has never failed an audit. If you wanted to have exposure that way, AGQ, you just wanted to get the leverage without messing with it, you could play this way. Right there, AGQ. If we go from 75 to like 300, that would be an absolute crazy move on silver. I don't think it would be without pullbacks, but and we'd be talking about another, gosh, 300% upside. So AGQ would be like 600% upside, where it's already a lofty area right now. Seeing PPLT, platinum spiking also. As I talked about, that was probably going to be launching on up to 270 area. You know, platinum, yeah, taking off. Probably $3,200 an ounce is probably where that's heading. So we may take a little pullback and go on even higher. So these, you know, platinum and silver were the two bigger plays I've mentioned all year long. So palladium here is the laggard. If you want to catch one that's the underdog that has potential to catch up in a big way, PALL would be a way to play. Or, you know, more savvy and get involved in the futures, but you know, this high stakes game, ping pong and ding dang. Just trying to break through the 618 there, which sets us up for potential up in this area. That'd be a crazy move. It's more than a double. So PALL could still have more than a double left in it. SNDK. Yeah, these are movers. These are things moving $2 more up in the pre-market. When I ran the list, probably come back to the roadmap line. And AFJK. Watch for that to come back down. And gold miners still being crazy. Now, the flip side of all this is we'll probably get some kind of crazy correction in gold, silver, gold miners, all that stuff. We'll probably get some kind of pullback, and it could be rather large. So don't just throw all your money into it expecting to solve all your problems. Silver was the biggest play I expected in 2025. It's not really my biggest expectation in 2026. What is, I haven't really figured out what I expect to move. Maybe space robotic stuff. This one, dumpster fire, reverse splits. Be careful. Absolute dumpster fire right here. Probably going to come all the way back down to the bottom. ASPC, acquisition, SPAC. Another one probably come back down. Now, copper may be this one may be a big player in 2026. Hasn't really busted out, hadn't really run. If we start building these big data centers and all the power plants and all the electrical distribution, it's a big stress on copper. We could see it go from 5, 6 to 8, possibly 10. Just in the chart right here on this breakout. Maybe even higher. FCX might be a big winner if that happens. See this run on up into the 80s, maybe even 100. MU. Find a little resistance here. That was kind of like the top of where I expected it to run. But if we get even more, if this just keeps ripping, 400 be a real target right there. So I grabbed, my high probability pattern was to get in back here and get out here at 200. If you held on, great. I got my piece, I moved on. I'm in the green for 2025, so I'm pretty happy with what I've done. Just to, just kind of show off, like, here's my performance, right? This is year to date. I started this, tracking this and showing it publicly back here in April around tax day. That's been my performance in 2025. I'm pretty happy with that. I'm not trying to, not trying to do anything crazy here. Not trying to ruin it the last 4 days of the year. Almost $50,000 just since April. I think I'm going to push this over 50,000 by the end of the year, which, 4 trading days left. So we'll see. We'll see, but it shouldn't be hard because we're at 49,935. So I just need like $65. I probably have that in options. So be careful out there. Make sure you have a plan. Make sure you, consistently book profits. Small losses. This might come back down, retest the breakout back here, Korea 3x, leverage. Now, leverage stuff doesn't always follow my pattern, so be careful. Shiny, another 3x leverage. Nugget, lots of leverage stuff. CLS, probably going to come back to the roadmap line. Yeah, some of these gainers giving up their gains already. MU, that's a 2x leverage on MU. MULL, another 2x leverage on MU. ALB, trying to get through that resistance point right there. We've been here a few days. Had that zone on here for months, years, really. Drew that high back there in 23. Said that was going to be a significant point of resistance, probably. May see a pullback. That, if we pull back, that would be a buying opportunity for the breakouts. Or you could just wait for the breakout. The upside potential here on ALB. Way up here. Now, ALB is a miner. And the chemical specialty, but they also control lithium production. So that's the play right there. ALAB consolidating right here. If we could pop through the 201 area, 287 on the upside, AEM lower high, so caution. Despite gold going higher, this is not. It's a cautionary little bit cautionary there on AEM. SIL, silver miners, not making the big leg up like silver is. SLV, be careful here. If it turns out that the paper silver has a problem, there's 300 times more silver paper issued. The paper, shares of like SLV and the futures represent 300 times more silver than actually exists in the vault. So if there's a hiccup here and we need physical silver to back this, SLV could go into liquidation. Do I think BlackRock will do that? I don't know, but it is a possibility, distinct possibility. SIVR, physical silver. There you go. That's another one. Arbiton. I like Sprott better than Arbiton, but or Aberdeen, however you say it. Nvidia, another leveraged Nvidia. Be careful. And SLVR. There's a Sprott miners and physical. So I'd be on this one before I was on SLV. So SLVR. Looks like it's due a pullback. Be careful. No decliners. That was just crazy. And 3 with setups today. We'll go through these 3. That's the opportunity. 143 upside potential. So there's the entry. 143 targets. That's a downtrend. So that'd be a kind of a buck in the trend setup there. NPK. Here's the high. Here's the low. There's the entry triggered on Wednesday. 125 targets. 50 trades, 72. Just a real average setup. So just, 50 trades is statistically significant. 72 is right on pace. Just slightly under the 74.5 or 74.8 average. That's the average for this across thousands of tickers, thousands of setups. So a little bit light, but in line. And then 1.2 is the average. So this is a little bit light, but also in line. So make your decision if you wanted to get after that or not. I'm probably not going to take it. And then take 2. There's the entry. 270 target. 30 trades, 86, but a negative profit factor. This one, when it goes wrong, it costs a lot of money and is a net loser. So despite it being profitable more often than not, more often than the average, 30 trades is statistically significant. When it rips you hard. So be careful out there. I'm probably not going to take that one either. But those 3 are set up for today. Now, not a lot happening today. So be careful. We're kind of in this end of the year churn. Still low volume. Still got the setup to push higher. This not far away from that 69.80. If we tag it right up here, that could be the top. We don't have to reach up for 7,000. This could kick off a bigger pullback, so be careful out there. Everybody, be careful. That daily roadmap line is a long way down. Way down here, 6,500. So I would watch out for if we start breaking back down below 68.90, that could be indicative we're going to come on down. Then support down here around 67.25. If we get below that low, probably going on down. Otherwise, 69.80, probably the upside target. It is the upside target for now. I'm going to set an alert there. And that's the show for the day, everybody. Yeah, Bitcoin's just stuck. So Bitcoin's just churning. Like there's no breakout, no breakdown. Slightly higher lows, lower highs. This is a watermelon seed. This is highly unreliable. And if we break down below these lows, same, nothing changed here from Friday or from Wednesday. We start breaking down, highly likely we're going down to the 75 area. Doesn't look good. So there you go. There you go. Tesla probably coming back down. 420. I'll cover the Mag 7s here real quick. Apple fell into breakouts. Pushing down below that uptrend of lows. Can turn down. Visit the roadmap line. Amazon, lower highs. Be careful. Support right there at the roadmap line. If we start breaking down below that, maybe 213, but if we get below that, bigger trip down. Google still has the opportunity to tag that 337. Meta, I still expect this to do one more dip. Right back here. Forward breakouts, resistance here. If we can get above that, big upside, 12 to 1300. Microsoft, the more it stays under this roadmap line right here, the bigger opportunity to go on down. And Nvidia, resistance right there, 495, stand under 495. Downside, back to the breakout from last year's high, this time of year last year, 150 area. If we can get above that, 195, upside target 205 or 220, excuse me, 220 right now. That would be the upside target right there, 220. And then Tesla probably pulling on back. Failed the breakouts. Wouldn't surprise me to do that into the new year. Then pop. Bigger picture upside targets, probably 550, 600. But we're probably due a pullback. This pullback here, we did the upside. We hit the targets. Struggling there. Now, it could just consolidate here for a little bit and then pop on up to 550, but it provides more upside if we go ahead and pull back right down like this and then launch it off. And Netflix still churning in here, trying to hold this support. If we can pop, good. Otherwise, watch out below. That's yeah, I don't expect anything to really move much, but there you go. And I'll be back again on Monday. Same bat time, same bat channel. No market masters today. So have a great day, everybody. We'll see you later. See you again soon.